welcome back to the Don and Gino Real Estate and Finance Show right here in your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Well, thank you for being part of the Don and Gino Real Estate and Finance Show on this Saturday. That's right, every Saturday, 9 a.m. to 10 a.m. We get to share with you such great information with the best professionals we can find locally right here in Santa Cruz and nationally. And we've been doing this for over 7.5 years for a reason. And you can find out more information at donandgino.com. Or if you want daily updates of what's really happening in the real estate and financial community, we have created a daily video blog by going to nrecafe.com. That's the National Real Estate Cafe. And we give you updates of what's really happening, because there's a lot of media out there that likes to put spins on stuff just to get you attracted to their information. Remember, they're marketing companies and entertainment companies. They sometimes don't even know what they're talking about. So come to our site, and you can actually get them sent right to your phone. You get these little updates sent to your phone by texting NREC to the number 58885, and you'll be in the know what's really happening in the real estate and financial world. So to keep you in the know, we brought one of our most favorite and knowledgeable guests we have on our show on a regular basis, Mr. Chris Ingram with Ingram Financial Solutions. And we're talking about this recent stock market meltdown. And there's certain specific stocks that are going down, obviously, the FANG stocks, you know, all the popular ones that we all know about: Facebook, Apple, Amazon, Nvidia, I don't know, what, Netflix, Google. Yeah. So we wanted to bring, we talked about why the market is adjusting. We feel, you know, between tariffs and the Fed raising interest rates has got the market a little fearful, and it's actually made a lot of, it seems like a slowdown in the economy, not a crash, and a slowdown in the real estate market, because interest rates have gone up a full % over the last year. I got a chart here that shows that it's gone up a full %. So if you're looking at, let's just say, get around numbers, 4.25 last year, at 5.25 this year, that affects the market. Still great interest rates and a great market. The real estate market is still strong. We don't have enough inventory still, so hang in there. So, Chris, what should someone do now that they're seeing their stocks tumble some? Should they panic?
Never panic.
Thank you.
So that's the first thing. Yeah, I mean, you know, take a couple deep breaths, pull yourself together before you call your financial advisor, before you go to place that trade online. Take a couple deep breaths and make a rational decision on what you want to do. I think people need to look at a bunch of different stuff. So first of all, you need to watch what the Fed's going to do. We talked about it in the last segment. Fed's, you know, raising interest rates. If they continue raising interest rates, you know, there's some things you want to think about with regards to your portfolio and how to play that. But aside from that, you know, what we're seeing right now is, you know, I talk a lot, and I've talked about it on the show quite a bit. You know, technical analysis, looking at the markets and trying to understand the charts. So there's fundamental analysis, what's going on underlying the data, and then the technical analysis of charting the market and trying to figure out where it's been. So a couple of things that have happened recently is, if you go back through the year, you had in February, the S&P 500 had an intraday low of 2532. Okay, market rallied off that February low, and then it came back down in April, on April 2nd. Didn't quite get all the way back down to 2532. I think it was 2581 maybe.
About that, yeah.
And then it rallied from there. And then in October, we came down to 2603, I believe was the number. Okay. So the first two things you're looking at in this market.
And today, when we started earlier this week, I know it was at 2644 earlier this week.
Right.
Like on Tuesday it was.
Right. So the first thing you got to see is, can it hold that 2603 level that we had back in October? And I think more importantly, can it hold that 2532 level back in February? Most analysts, most people that I'm listening to, myself included, all believe that this market is going to retest that 2532 level. And that's going to be about where we can set in a base to maybe not rally right off the bat, but kind of build in a base there and then start to proceed from there.
I mean, it rallied pretty high. It went all the way to 2940.
Right. It did very well. Right. And you know, again, going back to should I panic, we were at this level in February. So, it's not like we've crashed to this all new level. We were here not all that long ago. So we're not really in this uncharted territory. Market's relatively flat for the year. Most people portfolios are slightly up, slightly down for the year. So this is not an area to panic in. Now, if the market can't hold that 25.32 level and starts to break below that, that brings a bigger concern, because then you've got a pretty far drop till you get to the next support level. And what that'll potentially do is you have the 50-day moving average on the market and the 200-day moving average. If the 50-day moving average crosses below the 200-day moving average, that's what we call a death cross. If that happens, that's a pretty bad omen for the markets, and that's something that could show that we're going to fall more than where we are currently. So going kind of back and putting that all together, what you hope is that the market can hold that 25.32 level, and we're pretty close to the bottom here.
Right.
Okay. If it can't hold that level, then you've got to start thinking about, where do I go from there? So two different scenarios. I think right now we're kind of in a wait and see. Can it hold 25.32, and where do we go from there?
Well, that's important, and I'm glad you know where these, and hopefully you're really listening to Chris. And again, we're here with Chris Ingram with Ingram Financial Solutions. How do they find you again?
Just go to my website, ingramfinancialsolutions.com.
That's easy.
Yeah.
And what I love, Chris, is you're going to help. Hopefully, you're really listening out there, whether it's for you or it could be you're helping your grandparents or your parents with their portfolios and stuff. A lot of people will see a dramatic drop, and you're talking some of these stocks. You're looking, wow, I just lost 26% in my Netflix or my Facebook or whatever, and they're pretty big drops. But if you would have sold back in February, remember, then it goes right. They all went up and then some. Mm-hmm. I mean, my Amazon was up 150% at one point. I mean, come on.
I can go through history and tell you all the times that Apple lost 30% and everybody was on the street talking about how Apple was dead. It can't live now that Steve Jobs is gone. They're a value company. Innovation has died at the company, blah, 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 blah. And yes, it's had these big dips, but it's rallied out of every single one of those dips and done very, very well. So it's part of the process. Some of these high flyer stocks, when you have stocks that can go up 150, 200% in a couple of years,
right,
those are the same stocks that can drop 35, 40, 50% in a pullback. And so you just have to live in a more volatile world if you want to benefit from those
companies. And be comfortable with it a little bit. Like you said, unless you're pulling out the money tomorrow. Like, I mean, I know my Amazon stock, for example, is down substantially, but it's still up 100% over what I purchased it at.
And hopefully you don't have, well, I know you don't, but hopefully most people don't have 100% of their money in Amazon. That's the other thing, is you're supposed to be spread out.
I got so much spread out. I'm looking at
a
couple pages that you've helped me, put together, and it's nice and what's nice is a lot of these, if you were only in those, your whole portfolio may be down 30%. I'm looking at mine. I still have some of mine that you've helped me with that are up.
Right.
This last, and it's kind of nice. It's not all red. I got some greens that are going on there.
Well, and so I think, and we'll probably talk about this more in the next segment, but I'll tee it up here because we're almost done with this segment, is that who are you and what is your situation? So that's really how to deal with this. And part of what I say with that is, are you somebody that's a short-term investor? Do you need your money soon? Are you 20-some? Are you in your 50s? Are you currently retired? Do you have cash on hand, or is it all in the market? Do you have access to more cash? Are you going to make an IRA contribution? There's lots of things to think about with how you should approach this market with what it's just done, and turn this pullback into either an opportunity, or make sure that this pullback doesn't turn into something more detrimental to you in the long run.
All right. Nice tee up, Chris.
You got it.
All right. We have one more segment here with Chris Ingram with Ingram Financial Solutions on the Don and Gino Real Estate Finance Show. Again, you can always see us live at donandgino.com, or see all of our past shows. Check out our YouTube channel. I think there's 2,600 YouTube videos now. It's ridiculous. Yeah. We've been great information. So in our final segment, we're going to talk a little bit more about the current stock market correction and how far it might go, and what what you need to think about for your own portfolio as opposed to just panicking. When we come back to the Don and Gino Real Estate and Finance Show, final segment coming up, going to be a doozy.